So once again, welcome everybody. Thanks for spending your time with us this evening on this Benori webinar. Just in terms of my own introduction, my name is Ashish Gupta. I'm the founder and CEO for Benori Knowledge. What we thought we could do in today's webinar from an objectives point of view is we are going to discuss with two eminent leaders, things around the economy, the Indian economy, the global scenario, and why India just might be the saving grace next year for the world in terms of expectations around economic developments that are happening in India. We will also talk about some amount of, we'll talk about investments that might flow into India next year, and then do a sharp discussion around ESG and topics therein. Overall to discuss how things are panning out from an ESG perspective in India overall. With me in the webinar today are two esteemed industry leaders, Utsav Baijal and Shubhajoy Sengupta, both close friends of mine. Let me maybe give a quick introduction for both of them. So Utsav is a partner at Apollo Management. He heads the India private equity practice. He works across all kinds of asset classes, private equity, mezzanine, and credit investments across in the US and Asian markets. And he's on the board of several companies in India as well. Before that, he was at Bain Capital, and prior to that at McKinsey & Company. Shubhajoy is a partner at McKinsey. He leads the clean technology practice, and he's a member of the CII Power Committee as well, and also of FICCI Climate Change Committee. He has been regularly sharing his expertise as a speaker at various energy industry fora and conferences. He has co-authored several landmark McKinsey publications on the energy sector in India. And prior to joining McKinsey 8-9 years back, Shubhajoy was the managing director of the India practice for Booz Allen and Hamilton. So welcome Utsav, and welcome Shubhajoy. It's indeed a privilege to have you guys today. Before I sort of start with Utsav, in terms of the plan for this webinar, I would just spend another 5-6 minutes in summarizing the key findings that Benori report that we have done recently is suggesting around the economy, around ESG, technology adoption, and also talent issues that industry faces in India at this stage. Post which I will hand it over to Utsav, who will talk a little bit about his own perspectives on the Indian economy, the global economy, and some other very interesting perspectives around investments as he sees it for next year. After that, Shubhajoy will go live with his thoughts on clean technology, ESG, different kinds of frameworks, green hydrogen, and some other stuff that he will talk about. And towards the end of the webinar, the last 15 minutes or so, we will I will essentially ask them questions that anybody has put in the chat window. To that point, I would request that people please do start putting up your questions as you want to ask them. And towards the last 15 minutes, I'll make sure that as many of these questions get covered. With that, let us start talking about the survey that Benori had done. So essentially, in terms of the methodology that we followed, the idea overall was to understand from business leaders around from India essentially around their global outlook and their Indian economic outlook. The areas covered were around, obviously, economy, integration of ESG, readiness of industries and various companies to adopt technologies, and also what they were doing around talent management and associated challenges. So this was completely based on primary research. We ended up doing 150 interviews/surveys. The industries that we covered are shown here, and the percentages of respondees as well. So from the BFSI, TMT, professional services, automotive, industrial engine, manufacturing, pharma and healthcare, and consumer and retail mostly. And of course, there was a distribution in terms of size of the business. So large businesses we are defining as more than 3,000 crores in turnover. So 55% of the respondents came from that segment. Another 26% from between 250 to 3,000 crores. And finally, about 19% of the respondents were from companies which are less than 250 crores in turnover. So talking first about, in general, what people feel about the economy. The good news here is that 84% of the respondents felt optimistic about India's growth in 2023. So, that's really the good news. Some of the themes that people highlighted around what would be the top 3-4 themes of next year. Clearly, there is growing concern of a global recession. A lot of the respondees felt that technology adoption, digital transformation would be a major theme, would continue to be a major theme since it's already been a very major theme in the world over the last few years, especially. And then 36% felt that climate change and sustainability would be number 3 in terms of importance as a theme next year. Some of the drivers for the optimism in India is clearly around the rollout of the 5G, advancing digital infrastructure, then government policies and the PLI schemes and the inflowing of massive investments in manufacturing. That was the second driver. And very interestingly, most of the executives felt that all of this growth and this optimism will not be at the cost of the planet, will not be at the cost of climate and so on. And this will really be sustainable growth. So energy transition targets, people felt would help us grow sustainably. Talking specifically about industry verticals, the factors, some of these I have mentioned. Generally, people felt FDI inflows, post-COVID pent-up demand that is getting expressed now, manufacturing, increase in digital economy, and the lower cost structure of our economy, and especially our talent pool, the cost of our talent. These are some of the big drivers for why people feel that there would be significant growth and we should be optimistic about our economy. 63% of the business leaders for their industries felt optimistic, 29% were neutral. And I'm not going to go through the details here, but essentially the maximum excitement for growth next year is in the pharma industry. So if you look at the big dark blue bar here, 85%, that's 85% of the respondents said they are very optimistic about growth in their industry. Automotive was 77%, TMT was 62%, consumer and retail was another 62%, professional services 58%, and BFSI was 2%. And that's maybe, Utsav, you could address this later, why only 42% people felt extremely excited about growth in the BFSI industry next year. Coming to ESG, there is a high level of awareness that integrating ESG reporting into your other forms of reporting and compliance is going to lead to improved financial performance. So almost 2/3 of the respondents felt that integrating this reporting into their overall reporting is important from a financial performance standpoint. And also because they felt that way, it is no surprise that 74% of the larger businesses are already, they feel ready to adopt the BRSR framework. And again, interestingly, it's also not only the larger companies. 45% are ready in the medium businesses and 44% are somewhat ready. And between the two categories, almost 2/3 of the smaller businesses are also somewhat ready or fully ready. The big initiatives, no surprise here, is in general trying to reduce the carbon footprint in terms of the ESG initiatives, and energy efficiency and recycling and waste management turned out to be the bigger initiatives that companies are taking. Having said that, a lot of them said huge challenges they face, and this might be opportunity for you, Shubhajoy, to provide them with consulting services. That setting the ESG targets itself, budgeting, getting access to funds, and finally being able to measure the efficacy of implementation and keep on tracking it. A lot of companies are facing challenges in doing that. Similarly, when we talk about technology adoption, again, cloud, AI, ML, automation, 78%, 61%, 54% have adopted. Somewhat adopted is also not a small number. So in general, there is a digital revolution and a tech revolution happening in the country. And that is also showcased by the amount of budgeting that companies want to do for next year in terms of tech spends. So more than 20% growth in their budgets, 43%. Between 10 to 20% growth in their budgets, 38%, right? So at least 81% of the companies said that they would have at least a 10% growth in their tech budgets for next year. Strategies, again, no surprise, talent, we will talk a little bit more about that, but acquiring talent and in niche domains, having effective communication strategies for all key stakeholders, and again, trying to figure out how they can make the efficacy of implementation better. And this is mirrored in the challenges also that companies face. How do you measure the ROI? How do you get all the stakeholders to essentially, thumb the table and say, okay, let's do this. And finally, lack of talent is a perennial theme. Finally, if you look at the talent piece of it, and this is not a surprise at all. I mean, all of us have talked about it for the last few years in great level of detail. But the biggest challenges are really around 61% of the executives felt that having the right talent in their organizations is a huge challenge. And they are at the same time trying to adopt strategies for upskilling and reskilling. And Shubhajoy, I'm sure in the ESG space, this is becoming a big issue for us. We just don't have enough experienced and skilled professionals who understand that entire space really well. Similarly, high attrition, all of us are going through it. And then, how do you create cultures and purposeful organizations where employees' own purpose is aligned with the organizational purpose? So all of this came out to be big issues on the talent side. So this is some of the insights that we have garnered from our report. But with that, maybe I can hand it over to you, Utsav. And I would just request participants to start typing out their questions in the chat window so that I can pick these up as we are going along. Utsav, if I may just hand it over to you now, if you can please give us your perspectives and thoughts on two issues. One is really around the economy in general, both in India and globally. What might be the the wild cards, what might be some of the positive surprises that we might experience next year. And if you also believe that India might just be a saving grace for all of us from a global economic development and economic growth point of view. And the link to that also, how do you see investments flowing into India? At a high level, and we don't need to get into anything specific as such, but at a high level, and what might be some of the sectors that you are also seeing might be of great interest to investors in general. So with that, over to you, Utsav.
Well, thank you, Ashish, and thank you for having me. And for everyone listening, maybe I'll start with starting with the global context, because I think understanding what has happened globally is important before we put India in context. And I sort of go back all the way to the Lehman crisis, because the response of the US government at that time was to print about $1 trillion to counter the impact of that crisis. And the balance sheet of the Fed increased from $1 trillion to $2 trillion. And then over the next 10 years, we had actually had a pretty long bull run in the historical context. Typically, bull runs last for 5 to 7 years. This lasted all the way through COVID. And the Fed continued to print money, and the size of the balance sheet went up to from 2 to close to 3.5 trillion just before COVID. And even before COVID happened, there was a lot of talk about when will the economy slow down. The rates had been very low for a long period of time, and there was an expectation building up where uh, something had to give, and there were some excesses being built up already. Even if you look at my industry, which is private equity, the number of leverage buyouts, the amount of leverage which was being made available, the kinds of covenants which were in place were actually as high as just before the Lehman crisis. And then COVID happened. And over a 3 month period, the Fed printed an additional $3 trillion. So, all the way from 2008 to 2020, they had printed, 2.5 trillion, but in a 3 month period, they printed 3 trillion. And in the next few months, they printed another $2-3 trillion. So we had the Fed balance sheet go from 3.5 trillion to close to 9 trillion over a very short period of time as the US tried to counter the impact of COVID. And all the governments followed suit. And I'll talk about this later. Luckily, India didn't have the fiscal headroom or the money to print, so we didn't print, and we chose to lock down instead. And maybe that's put us in a better position than otherwise. But you had this massive printing of money. The hope was that it'll revive the economy, but what actually happened was that it just went into riskier assets. So you had this massive increase in anything which was a risky asset, whether it was housing, tech stocks, Bitcoin, crypto, everything shot up in value. Eventually, it caught up, even though the Fed kept denying it and kept hoping against it. And inflation went up, energy prices went up. Obviously, the Ukraine-Russia war didn't help with the supply chain disruption. And as inflation went up to 8-9%, which, as everybody knows, the US is not used to, the Fed had no option to start cooling the economy down. And what we are seeing now is an increase in interest rates to still levels much below what we've seen in the 80s and the 90s, but much higher than what anyone who's in the professional careers over the last 20 years has ever seen. Um, and our view, at least internally, is that we are still not seeing the end of it. We are probably going to see another 150 basis points of rate increase. And what that means for someone who's paying their house loan with a 1%, 2% rate, which is now going up to 5%, is almost tripling of their EMI payments. And so, as a consequence, all asset prices are coming down. And we are finding pockets of leverage which exist anywhere in the world. We first learned about the UK pension system, then we learned about FTX, then we learned about crypto. And I suspect, and to your question, Ashish, where are the pain points or the hidden pain points lying? I mean, the US is still very levered today from a debt to GDP standpoint. It's above 100% corporate debt to GDP, and a lot of the debt is with lowly rated companies. So companies rated less than triple B actually account for 80% of that debt. So poorly capitalized, lowly rated companies have more debt today than ever before in an environment where rates are going up. So I suspect, and we suspect, that there is a lot of pain yet to come. There are a lot of defaults have not spiked up. We're starting to see some signs in the global default rates, both on the household credit card side as well as corporate, but still not enough to worry you. And so there are two schools of thoughts. One school of thought is that there's a lot of pain left and there'll be some things blowing up like we've already seen in a few segments. And the second is that there may be a soft landing. And I think that's where a lot of the macroeconomists are spending time trying to think about it. The way we'll think about it from an investment standpoint is the rates are going to go up. So you have to be very careful on anything which is rate sensitive. So whether it's like a construction business, how do you think about that business? You probably have to take a very conservative view. You have to start building scenarios where there's going to be much more volatility, much more inflation, much more cost pressures for all your businesses. The Ukraine-Russia conflict, at least again in our view, is still in the first innings, and this is probably going to be a multi-year war, and it's going to embroil other parties in Europe. So supply chain disruptions will hurt. Luckily, Ukraine does not actually move the needle for the rest of the world, but other than energy, but you've got to take into account volatility. And you're going to have probably high energy prices on one hand, and this pressure to hence move to alternate energy sources and energy transition faster than before. So I think that's the way we sort of look at the world, much more volatile, more difficult from a borrowing cost perspective, and things which were effectively free, uh, that party is over, right? And we are looking out for pockets of pain which will emerge, which we frankly don't know where they exist, as we didn't know about FTX and the UK pension system. India, in my view at least, I think managed through COVID very well, courtesy of the vaccine. I think we look at China and, thank God our vaccines worked. The second thing we are happy about is thank God we didn't print money to the extent that we are actually in a reasonably good fiscal position. Inflation at 7% is no different from what we're used to anyway. So, both the consumers and companies are pretty used to it. While energy prices are down, we are seeing, as you rightly pointed out, and as all your survey respondents said, that there is a lot of demand coming back because of money saved up through the pandemic. And I think we are finally seeing some of the benefits of the structural changes the Modi government has made, whether it's the IBC, and because of which the corporates are not as levered, or the banks are much healthier, or the GST, which I think means that the more compliant, better organized businesses are doing better and are scaling. Or finally, after 20 years, the government has managed to privatize, Air India, 20 years since they did with Maruti, or even something like RERA, which has at least starting to clean up a very important sector in India where there were lots of stuck projects and poor productivity in real estate. So, all of that, I think, to your point, puts India in a very good spot. And that's true also politically, because politically, Russia is going through whatever it's going through. China has, with the zero COVID policy and the suspicion with the rest of the world, has put itself out. Brazil has many more challenges, both on the governance side, and somehow our, even our governance situation looks actually not bad. Um, and so with that, we kind of look at this period, and we're looking at all our portfolio companies perform really well. Um, we have a financial services company which collection ratios are like through the roof, much better than pre-pandemic, and we're scratching our heads to say, when will this global crisis hit India? But it's not showing up right now in the numbers. I saw the first report yesterday from Nomura, where it actually said that GDP will be less than 5%, and I think they're the first out there who have put that number out, which is different from what the government has said, which is 6.5. But at least in our own portfolio companies, we are not seeing it. And I think in your survey, the optimism was, very clear, right? Above 80% think that things are, reasonably good. So I think India is in a good place, but I think back of Ruchir Sharma's quote, Ashish, and you may have heard it, which is India has a tendency of disappointing the optimists and pessimists equally. And so whenever you get optimistic about India, you should not get too optimistic. And when you get pessimistic about India, India will surprise you on the upside. And so we are sitting there looking at a lot of growth and a lot of good trends happening across sectors, but cautious about where we might screw up this opportunity which exists before us. Um, so that's our view on India, and I think between verticals or sectors, I'm very surprised to see the numbers on the BFSI space, because in our minds, one of the best sectors and the best themes is the financialization of the economy, and I think that's a multi-decadal trend. which is still to play out. We were looking at some numbers of the distribution of wealth in India versus the US. And the US actually was very similar to India in 1960. Not 1980, 1960, they had 72% of the population between $1 and $10,000. We're kind of similar in that split. And for the 25 years after that, the US economy grew at 8.9%. And the financialization really took place in the US economy in that period of time. So we've always looked at that and said, the same thing's going to happen in India. We used to have 60 million bank accounts. 10 years ago, it's gone to 620. So with that, it's obviously going to help. So I'm very surprised in financial services. And I think the second thing, which again, we are very bullish on, is this entire revival of manufacturing in India, courtesy the China Plus One and PLI and all the things that the government is doing. And I think there's a recognition by the government that we have to build our own domestic unicorns and back large groups to build mega projects, whether it's in the semiconductor space, whether it's in hydrogen, whether it's in renewable. And I think there is a recognition that the people who execute the best have to be supported by the government. And I think those are the two themes at least we are spending a fair amount of time on. I'm happy to talk about more themes, of course, but I'll leave it to Savajay also to chip in.
Sure. So before I request Shobhajoy to give us his thoughts, just two quick questions, Utsav.
Sure.
Do you think this global contagion will hit India also? I mean, what are your thoughts on that? Because, we have been more of a domestic facing economy for a long time.
Yeah, no, so I think you're right. I think that on the margin, it will impact us because, whatever export oriented businesses will have some challenges. I think energy prices continue to remain high, will continue to pose a challenge, even though we might transition to EV and the like. We are just replacing the shortage of oil with the shortage of cobalt or nickel or whatever goes into EV. So I think that's where we are vulnerable. And I think finally, I think we are a bit vulnerable to what is happening in our neighborhood. And I was speaking to one of the senior most bankers in the country, and he had said that he had never been more bullish about India in his 40-year career than he has ever been. And his only regret was that he was close to his retirement age. But the one thing he cautioned was that all of our neighbors are going through a lot of pain. Sri Lanka is bankrupt. Bangladesh has suddenly seen a lot of challenges. Pakistan, we of course know for a long time. And if the contagion hits our neighborhood, then that makes us much more vulnerable. Yeah. And I know we tend to, and the corporate world tend to ignore the geopolitics, but I think that's something which we should not ignore.
Yeah, last evening I was at a McKinsey event, and the theme there was that geopolitics will trump capital flows. Okay, so that was the basic theme that everybody was talking about. One final question for you. With all due respect to Nomura, the World Bank has actually increased our growth rate for next year from 6.7 to 6.9%. So I guess there's still a lot of noise in the data. I mean, one can't really predict this.
Yeah, no, so there is definitely noise. And so far, everyone has been more forward-leaning or bullish on India. I think that's why I mentioned Nomura, because it's for the first time I've seen a slightly more negative away from consensus estimate from somebody. And, I know that economist, and she's typically very thoughtful. So we'll have to wait and watch and see. But I'm not seeing that in our portfolio companies across all sectors.
Right. All right. Thank you so much, Utsav. That was brilliant. Thank you for your thoughts. Over to you, Shubhajoy. If you can please tell us about ESG and why you are excited or why you are not excited about that in India next year.
No, thank you very much, Ashish. Pleasure to be here. And I'll take the next few minutes just building upon the comments from Ashish and Utsav, and also focus a little bit more on the sustainability, both as a global trend, as well as we look at it both in terms of there's an obligation for India to decarbonize, as well as a huge opportunity for investment, job creation, technology leadership. And in our discussions with our clients as well as with the government, it's very clear that they're looking at both sides of the equation. And this can be one of the four pillars. I think the survey was very interesting, and our own research also brings this out quite close in terms of the big trends that India can ride on. So there's a quite a substantial piece of work which we've just completed, which is called Decarbonizing India. It is available in the public domain in the McKinsey website. And there we looked at in terms of course, the Indian government has made an announcement of a 2070 net zero target. And that in itself is not trivial to achieve. But we tried to assess a case to say, can we do this faster? Can we do it by, say, 2050 as an aspirational case? And is there overall a net benefit of doing it by 2050? And what might that look like? And then sustainability in the Indian context, where the rest of the world talks more about decarbonization, we have also looked at a few other areas such as water, which is a very important element, as we see many of the large cities in India will be water short in the next 20 to 30 years. And even now, if you see the price of water from tankers, is in many cases 1,000 rupees. So it's like a big problem over the next few years that we are going to see in there. And then the hand in hand with that goes an inclusion aspect of it. So there it's things like female participation in the labor workforce, which is again another area where there's a big opportunity to be had, tapping into non-traditional workforce areas and so on. So just to build on Utsav's points in terms of the macro trends for India, I think there are four that our work identified. Clearly, as a talent factory to the world, India is home to close to a fifth of the global workforce. And as developed economies are aging, we have a relatively younger population. How can we use that as a way of tapping into opportunities? So there was a very interesting article today in Fortune which said the remittances from other countries into India has touched $100 billion for the first time. It's, I think, the highest in terms of inbound remittances. So exporting talent and therefore also the skill development aspect of preparing that huge workforce that we have for becoming a talent factory to the world. An example is, India could provide doctors and nurses and paramedics and healthcare professionals, physiotherapists to meet the growing demand for healthcare among the elderly in developed economies. Second is, of course, manufacturing and supply chain. So I think this is one area where this China Plus One has been talked about a lot in the last 2 years. But now I think as global supply chains shift, there is an opportunity for India to capture and increase market share. And this has to be targeted on specific areas. Each country in our region would have specific markets that they are targeting. So in the last 2 months, I've traveled to Bangladesh and Vietnam, and I found that they are approaching this much more energetically somewhere than we are doing in India, both at a government and company level, to attract this. Semiconductors is a good one. Electronics is another one. I think the digital economy, right? So today we have something like 650 million internet users, one of the lowest cost, probably the lowest cost of data. So it's one of the largest and fastest growing markets for digital consumers. So we expect that another 350 to 400 million online shoppers will come on board in the next 4 to 5 years. Online gaming, entertainment market would increase. And then sustainability, which is where I want to spend a bit more time on. The global trend towards net zero, both from companies as well as countries, presents a huge opportunity for India in this regard. And what are we doing in this? I think Ashish's slides were very interesting, that most of the companies that you surveyed, so ESG and sustainability is not something alien right now. All companies are considering it. But it would be fair to say the action on the ground is not there. It's still to say, okay, what does this mean for us? How do we start measuring our scope 1, scope 2, scope 3 emissions? How do we become BRSR compliant? So we are still at that. We are not yet at a position of, and some experiments are happening. I think the most visible one is, can we increase the proportion of renewable energy in our energy mix? Now, be it a steel company or chemicals or cement, many of these where the percentage of energy costs as percentage of as a percentage of cost of goods sold is high. Everybody is looking at it to say that, look, if solar is available at 2 rupees or 2 rupees 50 paisa or somewhere there, how can we increase the usage of that? Now, where this became interesting was when we did the decarbonization study. The power is, of course, a very important element. 1/3 of the emissions still come from the power sector, a lot of it from coal. But there were several other areas which were quite interesting. And one was things like material circularity, which we have not, looked at as a way of decarbonization or sustainability. It has been sort of a lower priority case. But whether it is things like uh, construction waste, municipal solid waste, or other forms like automotive waste, cars, agricultural waste, or there are areas in the future like solar and batteries, which are not current waste streams, but in the future will become waste streams. Those will become, very interesting as well. And there are new business models we can see emerging, not just India for India's sake, but also can India become like both a green manufacturing hub and a green circularity hub for other countries in the region. So this is something which came as a real opportunity. Many of our clients have now started looking at to say, what are the next few green businesses we can be building? And I think this is something Utsav is a much bigger expert on this than I am, but we're seeing that companies with what we call green EBITDA, which is cash flows and EBITDA generated from activities which are also somewhat planet positive or environment positive. Those are being valued at a higher multiple compared to traditional conventional gray EBITDA type of businesses. So many of our clients are therefore looking to say, we may be in conventional businesses, but can we build additional new businesses which are sort of green businesses, which can then result in higher value unlock for us, because those are the investment opportunities many pension funds, sovereign wealth funds, etc., are looking at. So we're seeing this shift. Therefore, on one hand, how do we decarbonize our own businesses versus how can we also build? First part is what we call defense. And this is early stages, I would say, in India, coming from companies either who are raising money abroad, either debt or equity, or have a substantial export revenue. So there could be, textile or other products which they're selling to the likes of Walmart or Carrefour, and they're being asked by the large customers overseas, or auto components being exported to other countries, where the BMWs and Volkswagens of this world are asking them to show a substantial amount of decarbonization in their products. They are taking proactive steps. I think the other area we see is data centers, where the likes of Amazon, Facebook, Google, when they are working with data center providers in India, there's a lot of pressure on them to show substantial amount of movement in this area and real progress, not just offsets and so on. So therefore, early stage, these are some of the companies where some decisive steps are being taken. And what could those steps be? Obviously, the energy part is one, circularity is another. Looking at end-to-end supply chains, mobility. Another interesting area that is starting to emerge is carbon markets, which is still quite nascent in India. And India is actually one of the largest sources of carbon credits from our renewable energy side, but the demand for carbon credits is still quite low in India. We are seeing that that's going to pick up over the next 5 to 7 years. And early stages of development of both a compliance carbon market and a voluntary carbon market that can also accelerate this journey. So where if you have carbon intensive companies who can't abate or mitigate everything through the means of renewable energy and so on, will have to at the margin buy carbon credits to offset in order to reach net zero.
Joy, sorry to interrupt. Just please take one more minute and then you can wrap up your part, and then I can ask you a few questions. And there are a lot of questions which are coming in.
Okay.
So I want to have some time left for that. Yeah.
Yeah. No, so overall, I think this is, we are excited on the opportunity side. I think on the sort of the defense side, companies will take their own time. The pressures are different, right? The pressures are different. One theme we find is, in other countries, there is, companies are willing to invest to reach net zero. In India, companies are looking for self-funding type of projects or ideas, which they're there. So renewable energy took off only after it reached a grid parity. Other areas are still, hydrogen is still a few years away before that starts to happen. So the role of government, therefore, through policies and incentives is to accelerate when that price parity and the equation would balance, and then the market will kind of take off. Right. And the other part, therefore, is how to build some, few new green businesses. Could be electric mobility, carbon, hydrogen, many such areas where we are working on very exciting topics and ideas with our clients on. So let me stop there, Ashish.
No, absolutely fascinating, right? What's happening, and there's just so much action here. And I guess you would agree that we could actually dominate this market globally. I mean, we could invent everything in India and then export it to the world, right? In so many different areas. I was very intrigued by green circularity, and to be honest, I'm hearing that term for the first time. So pardon my ignorance, but could you give an example of green circularity? And the second question was, is this green EBITDA, is this something which is getting embedded in financial disclosures requirements?
Yeah. So I think, circularity is not a new concept, recycling and so on, right? But we say that, look, I think municipal solid waste, like massive 60 million tons of municipal solid waste generated. It's one of the largest waste streams in India. What's happening today, it's going into landfills or it's getting burnt, incineration or landfills, neither of which is very environmental friendly, because landfills invariably, a lot of harmful chemicals leach into the soil, reach the water table, and then create public health hazards, right? So there are technologies that exist now to treat that waste and create things like hydrochar or torrefied coal, which can be blended with your conventional coal. Coal is not going away in India for the next 15 years, right? But if we can reduce the amount of coal that's burned by using this treated waste, creating fuel out of that, and even 2, 3, 5% blending into coal, that's kind of a positive business case that can come. So that's an example of sort of circularity in that sense. Plastics, another great example. If we are able to collect plastic, stop going into oceans, and then extract some chemicals out of them. Utsav mentioned nickel, cobalt, lithium, etc. And at the end of life, the lithium-ion batteries, if there's a way to extract, there's still some 20 to 30% of the material which can be used and recycled into batteries. So this is, I think, a underappreciated and underleveraged opportunity. I think the Prime Minister talks about wealth from waste. And in fact, today I was with Niti Aayog, and they're talking about a circular economy mission, like the National Hydrogen Mission. I think we will see interesting action around that. I think the green EBITDA point, we see that, and just a simple example, if you say conventional power generation, the gas or coal-fired power, the enterprise value to EBITDA ratios are in the 3 to 4, 4.5. Renewable energy companies are valued at something between 8 to 10x of EBITDA. and it varies company to company, but that's the kind of it's a example, a good one there. Steel, we see that, of course, in India, we don't have green steel companies, but in Norway, there's a very interesting green steel company, and their valuations are substantially higher in that. So investors therefore need to get comfortable that what your business model and the raw materials you're using and the product you're using is actually having a fundamentally different and positive impact on the environment. And then there are obviously funds which are earmarked for those investments, whether they're sustainability themed funds or ESG funds and so on, which would only invest when those requirements are met.
Sure. All right, excellent. Thank you so much, Subhajoy, for your thoughts. Very, very exciting. Now maybe I can try and get through these questions that have been posed in the chat window and also in Q&A. So the first question is from Pramod. Hi, Pramod. Thank you for joining. Good that you could make it. Let me just merge this question with what Madhurima had also asked on the other window. So, Subhajoy, maybe you can take this question. This is around where do you see the investments in clean tech going, and what might be some of the sub areas? And we can also add the next question that Pramod has. Any insights on startups and, what kind of investment might be going in clean tech startups? Madhurima had mentioned that, we at Benori had done a report a few months back where we had projected $125 billion of investments coming into India over the next 5 years in this whole entire area. So maybe we can merge all the three questions and quickly you can take a minute or two, Subhajoy, and answer that.
So Ashish, I had sent you a slide. I don't know if that's possible to put up, if that's available.
Subhajoy.
So we had exactly, looked at it in three categories, that there are investment opportunities which are in the money today. Investment opportunity, next page. Just that one slide I will use.
Next page.
Yeah. So, over the next 10 years, I think 125 billion over the next 5 years may even be an understatement in terms of what is the opportunity to deploy it. But we say that, look, there's stuff that is in the money today, like two and three wheeler electric mobility, renewable energy, some elements of the circular economy, not all of it, but some elements of it. Some of the nature, there was a comment in the chat on nurture.farm and nature-based solutions, big opportunity area around this. Then there are things which can be accelerated with capital, with the right kind of capital and right kind of early scaling, things like green hydrogen, carbon financing, some of the new commodities like biofuels and so on. And then some other stuff which are probably more like 8 to 10 years out. Carbon capture, low carbon agriculture, sustainable aviation, long duration energy storage. Some of these are more sort of medium to long term, which we keep an eye on. So the overall, therefore, these three categories, that's kind of where the investment themes we are, both when we talk to our investor clients as well as our corporate clients. This is the kind of the roadmap of the themes and the timelines within which they come.
Right. And so I guess in all of these areas, there is a lot of opportunity for startups, right?
Yeah, and many of them, there's opportunity. I think this is an interesting point that where the big companies and there is the role for startups, there's a role for academia, and there's a role for companies. What we lack is sometimes this innovation ecosystem which may exist in in Cambridge, Massachusetts, or in the Bay Area, or other places like Israel and Taiwan. We've just not been able to create that innovation ecosystem where startups, academia, investors, and corporates come together and find a way to accelerate those. But we see opportunities in all of these. I think this nature-based solutions is a great one. There's, I think, some of the examples I see on the chart as well. Very, very inspiring, exciting stuff that's being done. And in some cases, the startups, the solutions that work in Europe and US, let's say in energy storage, will need a lot of tailoring to work in an Indian environment with 45-50 degree temperature, dusty conditions, day night temperatures being very different. So some startups I'm aware are trying to develop some of those kinds of solutions to really create solutions that work not just in an Indian environment, but an India-like environment in the global south.
Sure, sure. By the way, I'll talk to you offline about this. At Plaksha University, we are trying to create exactly that kind of an ecosystem. Okay, so that exists in Cambridge. Yeah. Utsav, let me come to you. Shishir is asking a question around. He's also similar to you. He's also surprised by the lack of optimism on the BFSI industry next year. Right. So let me put it this way. I guess people in general might be more excited than that 42% number that showed up in our survey. Could you comment on that and why also you might be more excited about the BFSI industry next year?
So my hypothesis on why the number is low is perhaps where we are in the rate cycle. Because typically what you find is, again, depending on which space of the BFSI space you talk to, when interest rates are going up, you tend to have a you typically have some lag in being able to pass on that price to your consumers. A lot of the consumers in India tend to not be able to pay that higher interest rate. So you can't pass it all on and you find like there's a squeeze in spreads. And so if the question was really, what do you think of outlook for next year? You may be a little bit bearish because of, we've just had this rate increase. We're probably going to have another 50 basis points and people might be thinking that this is not the right time from a pure investment standpoint. That's my only reason, because otherwise the Indian financial system has never been healthier. If you look at the corporate, the debt balance sheets of, or the capital adequacy ratios of banks or NBFCs, they've never been healthier. The stressed asset books are, which used to be 8, 10, 12% of public sector banks are like sub 2. Private sector banks have anyway cleaned up shop. And there is a fair amount of innovation going around in the ecosystem, both that's in the startup world, but also frankly in, the larger private sector and public sector banks. So the things which excite us are, there still has to be a migration of savings away from physical assets, which is a lot of real estate and gold, to financial assets. A lot of the financial assets actually are plain vanilla saving bank accounts in India, and that needs to go to investment products and the like. I was seeing a chart the other day in this really good book written by this guy, a professor called Scott Galloway, which he's laid out about 100 interesting charts on the US economy, because pictures worth 1,000 words. And it showed that, from the 60s to the 90s, but from 10%, 50% of households started investing in the stock market. India is like nowhere close to that. So there is still that migration of money which will go into mutual funds, insurance products, and the like. So pretty much across the board, you're going to see a fair amount of innovation. And we're going to leapfrog a lot of these sectors because of digitization, the digital stack. And we are seeing it in our own businesses. We own a small non-bank finance company, and our ability to lend directly to small and medium-sized enterprises, shopkeepers and the like, because we can now scrape GST data, Aadhaar data, connect it all together and underwrite these guys without having feet on street, directly, digitally through WhatsApp, which you could not have imagined 5 years ago, is now happening. And we are being able to access these guys despite paying Google and Amazon and Facebook and all of that to access them at prices much lower than what we would have paid like a distributor or a selling agent. So yeah, we are very bullish on the overall opportunity. Yes, in financial services, you've got to keep a few things in mind. Regulations need to be adhered to. You cannot have what we call a heart attack risk, because a lot of these entities are levered, and you have to have enough of the risk box and the risk mechanism so that you don't have a liability mismatch or you don't blow up. Other than that, there's a lot of secular trends. And if you look at like housing, for example, we've been looking at the affordable housing space quite closely, and pretty much every company in that space has grown at somewhere between 18 to 28% over the last 5 years through COVID. So demand is definitely very healthy. Profitability is reasonably good in that space. So there are pockets of opportunities pretty much across the board.
Right. Excellent. I'll take the next question, and that's for you, Shubhajoy. That comes from Priyal. Thanks, Priyal, for joining. So his question is, as a country from a policy standpoint, how can India really take leadership on ESG solutions as an overall solution package across industries, research, usage of degradable materials, and related to that question is the whole question of talent. How do we probably have an opportunity to take a leadership position in these areas, but then if you don't have skilled talent, then how are you going to do it?
Great question. So I think firstly, the role of the government here is to frame the right policies, give the right incentives, frame the rules, and then get out of the way. Right? This is the pace of technology development, the rate at which innovation is happening, the kind of risks that need to be taken. This is not something that the government needs to create a new PSU to do this. In fact, what we see, and we are working with some of the large PSUs in this space, and the conventional kind of advantages that PSUs have, for example, a cost plus regime, etc., that doesn't exist. There's like a fully competitive market. So we believe that a lot of the innovation is going to be driven by all the innovation will be driven by sort of private sector, not the private sector, but commercial enterprises rather than government coming in and creating lots of infrastructure. There may be, one or two areas where government can really help. I think one is demand creation and demand signals and demand aggregation. So green hydrogen is a good example. Today, the sort of gray hydrogen, which comes from natural gas, is somewhere between $1.5 to $2 a kg. Green hydrogen is maybe $3.5 to $4 a kg. So left to itself, green hydrogen is not viable. But if the government says that oil refineries need to use a certain percentage of green hydrogen blended into their gray hydrogen, and that becomes a mandate, then that creates a bit of a demand to kickstart investment into this green hydrogen space. PLI schemes we talked about, that's another example. So I think targeted, focused policy support and incentives, that's, I think, the role. I think the talent point is important. And there we see that there is ways to overcome those. India, all said and done, is a huge market, whether it's for renewables or hydrogen or electric mobility. So we see many companies globally who are very keen to tap into this opportunity. So we see a lot of partnerships as well. Whether it's hydrogen storage, electric mobility, carbon capture, all of these areas. So access to the technology is not something we need to worry about. And this is not, by the way, not new. Telecom, India is a huge market. There's no technology that Indian companies cannot access. Power transmission, India is a huge market. We have access to all the best technologies. That's not an issue, right? So yes, we do need to do our own R&D and so on. But I think technology access is not an issue. We have a big talent pool in terms of technical talent, but bridging the gap between what the next generation requirements are and then what we are teaching in the universities and IITs, that's probably a bit of a missing link I see. Right. And that needs to be bridged.
No, fascinating conversation. Just would have loved to continue, but unfortunately we are out of time, completely out of time. So one thing before we wrap up, as you start logging out of the session, a short feedback form will pop up. Please do fill that out so that we can make the next webinar even better, although this was absolutely world class. So I don't know what we will do better, but still please fill out the feedback form and let us know. With that, would really like to thank everybody who spent their time with us today, all the participants, and a big thank you to both of you, Subhajoy and Utsav. Thank you so much. All your comments were really, really insightful, and hopefully we can take some of this thinking and bring it out as a short piece on the main insights coming out of this webinar. Thank you so much.